All right, so getting into the morning automatically, if we zoom out a little bit, you can see an overnight session on the 12 minute. 12 minute is the left side of my chart and 1 minute is the right side for reference. Throughout overnight and basically from Wednesday till Thursday, we were kind of in this tight range, as you can see right over here. Right here. So usually what follows after accumulation is we see a manipulation move down. And as you can see, we come up, we take this high right up here. And what does that generate? Relative equal highs. We generate relative equal highs, which we know price will form. It will trade away from them, similar to the exact same function as equal highs. It will form them, trade away from them, and refer back to in the later once it's done its objective and refilled enough orders for whoever is entertaining certain positions at certain things, banks, institutions, algorithms, whatever, right? So essentially, as you can see right here at this 824 candle right before all of this little mess right down here, if we zoom out a little bit on the 12 minute, this is when I started to lean a little bit bullish. I was basically kind of unconfirmed until I saw some more structure form, right? And if we zoom over right over here, you can see all of this right here. We have this market structure break over here. We have this basically large CSS starting right here. You can see this is the last down move that put in that low. It liquidated this low over here inside of this fractal, right? Now, with that in mind, what are we anticipating for price to reach? Now, we should recognize and understand temporarily this low over here is going to be a protected low, and we are anticipating possibly upside potential once we get some more confirmation. And as I said, let more structure form, right? So as I'd stated yesterday about hidden S&Ds, those lie within wicks. It's basically, like I said, people call them rejection blocks. People call them hidden S&Ds. Like I said, hidden S&Ds sound quite a bit cooler. But I want you to recognize something. This white line right here, if I zoom in on the 1 minute, is depicted. That is the 50% of this wick. The reason that was in my basically eyesight is because you can see we did not get a near even close to full mitigation of this wick. You can see we dig down a little bit deep, not even deep, just a shallow mitigation right here, 3 points into that wick. So this is still wide open. And usually when there is a really obvious ominous wick, we are going to attract to it and price will refer off of that and use that as something as a function to base a move off of. So with that in mind, if we zoom in even over there on the 1 minute chart, what do we see? A beautiful 1 minute CSS resting right near that. Now, this is going to be basically what I was talking about yesterday in regards to tailoring down a point of interest and finding POIs in higher time frame points of interest, right? So we obviously, we can see we have this big displacement right here. We have this 1 minute CSS. We have a bunch of lows stacked over here, right? So we got a bunch of stuff lined over there to possibly frame something off. But the important thing is we are waiting for structure to form to confirm that narrative. And like I said, I had a loose bias until we had, and excuse these drawings. Obviously, this is on the 12 minute. They're less mumbo jumbo on the 1 minute because it's like little reference points I need to make. But what confirmed this bias, let me draw this over, was this 12 minute CSS right here. You can see we have this last down move. Before it puts in this low, we close above. This validates this as a valid low, in turn making it a valid CSS, right? So that right there, tied with that imbalance, is what confirmed upside potential, as well as having relative equal highs. Some people call these smooth edges. You can call them relative equal highs. You can call them whatever you want. But when we have stacked highs like this and we get some form of manipulation down after a phase of accumulation, this will always be a high likely target and easy to frame a bias off of, especially just given what we were doing. Obviously, you can see we have just been absolutely ripping, just upside, 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 and we actually made new all-time highs today, yet again. But with that in mind, getting into the setup that I had taken, like I said, or like I posted on Twitter, I did take a 1 minute scalp prior to engaging in this longer trade right up here, targeting up here. And it was this, and it was honestly a really, really quality trade. It was a loser. Which is normal. You're always going to have losers. You're never going to have a 100% win rate, blah, 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 right? You know what I mean? But what we see here is, right, we come up, we take this high, we start to trend down. Now, this, like I said, already bullish confirmation, right? We have a bunch of consolidation resting right over here. We come down, we wick this low, close back within the range. We even tap this fractal right here, tap the CSS right over here. This line right there. You can see we tap that on that little manipulation we get right there. And I'm taking a entry right off of here, targeting basically a 1-to-1 or a 1-to-2 or that high, right? So this one, you can see it wicks up, gets close to a break-even point, and then just reverses back down and refers all the way back down to this 12-minute CSS right here. Let me draw it out by a line. You can see this line right here. This is the 12-minute CSS, and something that happens quite often, and I want you to make a note of for when you're backtesting or something, is layered CSSs fractalized, right? You can have a 12-minute CSS, anticipate a 1-minute CSS to occur, and you can get a high probability entry off of that. Whereas if you have a 12-minute sweep, you can anticipate a 1-minute sweep to kind of be in congruence with those and be in alignment. Obviously, there's going to be cases it's not the same pattern every single day. Obviously, there's going to be times where it's a CSS and then like a sweep, but more times than not, they're going to be in congruence with each other and line up pretty well and give you a good entry off of that, right? So you can see down here, basically what we have is dang near layered CSS. We have the CSS right here that refers back to it. And then we could even deem this right here as a CSS. Some people can call this or do call it a propulsion block. Basically, it's just kind of like a layered order block. And anytime I see those layered and just a bunch of consolidation generalized around here, that is going to be a very high probability point for me. So once we saw this just absolutely strong move down, immediate rejection, and an immediate return back in the range, we close above this, validating the CSS. Remember, as I talked about yesterday, CSSs are color-coded, and this is the last down close candle. And for bullish ones, it's going to be the last down close. For bearish, it's going to be the last up close. And obviously, there's going to be some instances where it's a little different color coded, which I'll dive into on some other setups where they're present so you can actually visualize them. But what I did here was I took an entry right off the first tap of this just because there was no wick. It was basically a body tap, which I talked about yesterday. Sometimes if it is a large range candle, I will take an entry off of the body rather than the wick. But in this case, obviously, there was no wick. And I want to backtrack a little to this standard deviation projection and kind of talk about this because I know some people had questions on this right here. If you remember yesterday, if you were on the live, I talked about CSS projections, and basically what CSSs are on all time frames are going to be a lower time frame manipulation leg, or basically what you can classify as a CISD, change in state of delivery, anticipating basically it's just a momentum shift and prices changing in the direction, right? So even if we look at the 12-minute right here, this whole standard deviation projection was based off of this 12-minute candle right here, which is this right here. It's all one sequence, which I'll show some examples of standard deviation projections off of 1-minute CSSs, but I want to just point that out there, and that's where that standard deviation projection came to. And again, if you were on the live yesterday, you know that -1, -1.5 is usually going to be a retracement area. Price will gravitate towards that area, and if it starts to consolidate, there's obviously going to be some instances where price does blow through that and immediately closes above it. But more times than not, what we'll see is some form of retracement back to this, usually referring back to some lows, or at a max extreme, it's going to refer back to basically the move origin of the whole entire prior move right here, which you can see is completely down here, which is exactly what happens. We get this retracement right up here. We tap that -1.5 to the tick, and we refer back, get that, and we're anticipating this just to be a retracement. Why? Narrative. Narrative is higher. We have all of these resting equal highs up here, smooth edges, easy draw. So that automatically confirms that and tells us that this is not going to be a reversal here. We're anticipating just a retracement, okay? And we see this immediate return back. Obviously, we get entry, and then I'm trimming position at the 50% of this wick. And I'll tell you why the 50% of that wick is because of how well this lined up with that standard deviation. If I did not have standard deviations plotted here, I would have been taking off at this high right here. But since I had these standard deviations projected, and if you look, if I zoom in, you should be able to see this -2 lines up almost exactly with the 50% of this wick, which is what a hidden S&D Those are just going to be areas that are going to be high likely, especially when they are ominous wicks. Like I just said, if this is not ominous to you, then I don't know what is, because these wicks, when they happen, a lot of times price will refer to them, not just normal little wicks. Obviously, those work, but these are going to be the highest probable in terms of targets and POIs. So that was my first trim right there. And then final trim for that trade was right at that extreme, basically external high right up here on the 12 minutes. And that was a really good close there. It did go surprisingly a little bit higher, but the reason it went higher is because standard deviation projections, right? We get this close above the -2, -2.5. And again, if you were in that live that I talked about yesterday, I talked about closing above standard deviation projection zones and what the function is of them. And I'll talk about that real quick before I dive into other things. As you can see right here, this -1, -1.5, we get a close above this, okay? This setup happens, boom, trades, comes back, mitigates some areas, taps a fractal, proceeds to the -2, -2.5, which is what we are anticipating because that is the function of these. And you can see furthering and going on from that, we have this -2, -2.5. We close above right here at 954, and we refer back to it, tap it one time, and immediately go to where? -4, which we tap to the exact tick. So let me delete some of these so I can talk about this next setup. And then I'm going to, after I talk about this setup here, I'm going to dive into the one-to-one scalps and go over them. That way I can clear a lot of stuff on my chart and it's not too messy. Wait, the power of that retracement spooked me. Where at? Right here? I'm assuming you're talking about this retracement. I will say, yeah, that was definitely more so a violent retracement, but sometimes those are the best because when you understand manipulation, manipulation is speed. Manipulation is going to happen really, really, really quick. And especially the easy way to confirm if it's manipulation is a return back into the range. If it's quick and not lethargic, that's how you know that was a manipulation leg. And it's going to be the easiest way to spot it that way, which is why I was specifically referring to this immediate return back up after touching those mitigated areas right there. This next following setup right here, this was that second one that I posted on Twitter. This was the short after we had tapped the -4. And I want to talk about this too before I dive into this because I'm not sure if many people know about it because I feel like quite a few of y'all, or only a handful of y'all, or have been trading with standard deviations. But the function with the -4 standard deviation is price will refer back to 50% of the total range when the -4 is met, more times than not. Sometimes that's why some people will say you can turtle soup the -4, whatever. I mean, to me, it's illogical to just place a sell limit right up here. You need to wait for more structure to form, but it's definitely a strong confluence to use. And understanding where a high likely draw is for price to refer to after that specific deviation is met. So if we zoom in right here, we can first understand that this -4 was tapped to the exact tick. That put in that high right over there. And what do we see happen right here? A beautiful, beautiful, beautiful flip. We close above, we close below. This validates that this is going to be a protected high and price is not going to refer back to it. And we can anticipate a at least good short setup to present if it wants to. So this specific setup, obviously, we can see we have this strong move down, which refers to where? -1, -1.5. It bottoms out within this area, which is what? A retracement area. Referring back to either a max extreme at move origin or some form of consolidation. It could be a high, it could be whatever, but I want you to put a mental note on this move, and I talked about this in a couple of my YouTube videos, is that usually when there is a impulse move down, price will do almost a V-shaped recovery and go to the max extreme because there's not many things for price to refer to. So in regards to my entry, what I did was my first entry was right here at this extreme fractal. And the reason I call this an extreme fractal and not this up here, the extreme fractal, is because this is already mitigated. We already closed below it, tapped it, whatever. So this was the basically extreme fractal for me. I took my initial position, one contract right there. And once we reached up to the CSS and got this rejection off the CSS, I played a double tap. I placed another limit right here to get a basically just add-on position, just stacked in the position because it was really, really strong confluence. Seeing that wick down and immediately push out of that and push right back up and refill some more orders and start to gravitate towards out was absolutely just picture perfect, beautiful. And in terms of targets, like I said, with the -4 standard deviation, the function's going to be refer back to 50% of the range, right? And this yellow line right here is 50% of this entire range. That is from this low to this high, right up there. And we know with high probability, any POIs could be standard deviations, it could be lows, it could be zones, it could be CSSs, it could be fractals that you're using as targets, right? I'm going to, as I've stated multiple times, I look for exits, entries, POIs near these kind of areas. And you can see this 50%, this yellow line right here, lines up perfectly with this -2.5, which we already know is going to be a good deviation point to target as a potential area. Furthering off of that, we have this low right here, which is the more obvious low rather than this, because this is an external, this is going to be an internal low. And the fact that this little fractal area hadn't yet to be mitigated, we really have not tapped it. So usually any low residing within that area is going to be a high likely point to target. That is why we saw this absolute just impulse move down, right? So back up here, impulse move down. I really thought this was going to flush right here, in all honesty. Just based off this move, but you can see we started to consolidate, which is perfectly fine. That usually happens when we get these like V-shaped moves back down. We come up, we liquidate a high. There unfortunately was not a scalp setup. This would have been a picture perfect scalp setup right off of here, just referring to this imbalance, the extreme imbalance right here. But ultimately, this just flushed down to exactly at that point, retraced a little bit, and referred back to this more extreme external low right over there. So with that said, I'm going to delete some of these and talk about these scalps, and then I'll open it up for some questions. Oh, I also want to note real quick before I delete everything, if I zoom in on the 12 minute, what do you see right here? Let me delete some of these. You should see it already right now, which is why I said yesterday, if you're in the live again, the highest and the best trades will come off of what? High time frame POIs. Both of these trades were framed off of high time frame POIs. We had a 12 minute CSS down here. Boom. 12-minute CSS right here. Happens all day, every day, baby. All day, every day. The biggest moves, the ones where you engage in the higher RRs, are going to be off those higher time frame POIs. That is why I always use the 12 and sometimes the 72-minute to frame a basically bigger R trade off of. And then with these one-to-one scalps, I will be taking just within order flow, if that makes sense. Can be so simple, absolutely. Wait, the power... Don't worry, I'll change that. What are you talking about? Okay, I'm going to delete some of these and talk about these scalps that I like today. There's two really, really good ones off rip, which were actually, I think I have enough deleted right here to talk about this. Let me delete this. Yeah, so this was the first scalp that I wanted to engage in. It's just staring at your face and saying, come right. Literally, yeah. I'm telling y'all, anytime, going on a little tangent, anytime there's like a really, really clean CSS, which I'm going to go over again about the CSSs and how I identify them, because I know some of y'all weren't able to hop in the live yesterday. Anytime you see like a high time frame CSS in general and a really good setup presents off of it, those are going to be your highest probable setups, no question, especially when you have some kind of narrative and framework behind it, right? So both of these, like obviously for this bullish one, we had these relative equal highs right up here. And for this bearish one, we tapped the -4. We had yet to come mitigate that 50% of the range right there. So that was automatically like a no hezzy trade, right? But getting back into these scalps right here, this is that first one I talked about. We had all this consolidation right over here. We had this CSS that was really, really nice. I absolutely love this setup. And like I said, in my Twitter post, I would take this 10 out of 10 times. Every single time I see this specific signature, I would take it. We had some trend line highs right here. Boom, we could easily target those. We had this extreme high. And usually when they're extreme like this, those are going to be an easy target. But price wanted to do a little bit deeper of a mitigation today, which is fine. So that was that first one right there. And then this one right here was another really quality one. Obviously, we have this 1 minute imbalance right here. That price did not reach until after you had been stopped out in this position. But in regards to when the actual setup occurred, this is really, really quality, because we have this fractal right here. Let me push this back. We have this fractal. We have that wick high, that wick low. This would be the second tap of that fractal, because you can see we validate it here, tap it there, get a little push off, and then we come back, we liquidate these equal lows, and then you'd be taking your entry off of the break above, right above this high, which honestly would have been really, really quality. It was really quality. Actually, take that back. This would be another one that I would take 10 out of 10 times, but I was already in that other trade. So that was not engaged with. And then this whole move, like I said, there was really not many of those 1 minute scalps today. It was kind of like a slow grind up, and just really didn't present many swing lows that we actually violated. In terms of the next setup, this would have been the hesitant one. I would probably not have traded this because the only thing supporting it, yes, we have a 12-minute imbalance, but these kind of moves, especially recognizing off the -4 standard deviation right there, I would have been hesitant about this for that direct reason because, like I said, that -4, that impulse moved down. But specifically for a example, we have this nice 12-minute imbalance right here. You can see imbalance. We come back, we refer to it right here. We have this swing low put in right here. We body it. We don't close below it. This body does not close below that wick, so that is not invalidated. And you would be allotting one inside bar before taking entry at a maximum. And then if that following candle taps you in, then you have a green light to go. And that would have tapped you in right here, and you would have been out at a 1-to-1. Or if you are a little bit more advanced, you could be targeting up and towards these higher areas like this imbalance, the CSS, which we tap. But in terms of that scalp, that is that one. And then the next following scalp, this is probably one of the better ones of the day right here, in my opinion. This is about as picture perfect as you can get. Right here, we got a bunch of layered confluences. Obviously, you can see we are just downtrending right here, at least short term. This specific setup, we put in a high right here. We get an inducement action, one of my favorite signatures right there. We have this CSS, and this is actually a good opportunity to kind of talk about these CSS, which I'll dive into after this setup right here. But you can see, like I said, we have the CSS right here. We have this inducement. And since this is a 2-bar sequence right here that liquidates it and closes back within the range, we'd be taking entry off of the break of this candle, not the break of this candle, because this one put in the new extreme high. Does that make sense? So right there, 1 tick below, taking entry off of there, you could even be targeting new lows, because what do we have down here? Stacked lows, easy targets. You could be targeting those, or you could be targeting just a 1-1, a 1-2, whatever you are comfortable with. It's really up to your risk tolerance. But with that said, right here, I wanted to talk about these CSSs because I know some people had questions about them. And then I see the chat moving. So, okay, y'all are just talking about oily guy. Okay, nice. Never mind. But in regards to CSS right here, notice how, like I said, for bearish CSSs, what do we require? The last up close candle that puts in the high to be a what? Green bar, okay? In this specific sequence, what's the last green bar before this new high is put in? It's a black bar. You can see this. So since this puts in that new high, we anchor off of the low of the recent green bar and the high of that black bar that puts in that prominent swing point. You can see right here. This is a swing high right here. Since this one is not green and it put in the high, we consider this a sequence right here from this low to this high. Now, if this would have been green, this candle would have been green right here, I would be anchoring directly off of this low rather than this low over here. Does that make sense? I need some people to like give me kind of like a confirmation off that, if that made any sense. Yes? Okay. And it's going to be that way every time. Like I said in the live yesterday, it's never really going to be a 3 sequence. It's either going to be 1 or 2. It's going to either be the candle that puts in the high. Like, let me refer back to this example right here. This is another one of those CSSs that's a two color sequence. You see how this black bar puts in this high, but since it's a bearish one, we're anchoring off of basically we're waiting for a green bar that validates it. It's going to be this sequence right here. But if this was a green bar, this black bar was a green bar, that would have just been the CSS right there, if that makes sense. Because you can see right over here, right here, this is one of those ones where it's just one candle right here. You can see this candle right here, it's one black bar. Since it's a bullish one, we require one black bar, and that would have validated it. Now, if this would have been green and we would have had a black bar, like say this was this, say this was green, this whole thing would have been the CSS right here, if that makes sense. How to identify when the trade is failing? I mean, you're not wrong. I will say this. Usually, a good way to tell when your trade is failing, at least from what I've seen in just screen time, is usually a lot of times. This is actually a perfect example right here. This is a completely just random CSS right here. Hope you see this because this is one of those color-coded ones. You can see black bar, green bar puts in the low, validates it on that close. What do we see here? A lot of times this will happen at your entry. If you watch some of those Twitter executions that I post and just go back through them, you'll see a lot of my entries have this specific signature that happens. You'll see a lot of like tails right here, wick tails. Those, when you don't see those, a lot of times that can be almost a hand tip. I'm not saying you need to close your position. You need to respect your stop loss because you put risk on the table for a reason. But a good signature to see in regards to confirmation near or after your entry is a lot of tail wicking right here. You can see this off the CSS. This will occur a lot, and that just can be a confirmation if you want to be a little bit more at ease in your position. Same thing here. Off that trade I took right up here, you can see tail wick, very prominent in relation to the opposing wick. Is this recorded? Yes, I actually recorded this one. So this would be posted on YouTube. But in regards to setups, that's basically it that I wanted to cover today. So the floor is, oh, actually, no. There was a couple before. There was a couple in pre-market right here. And this was because I know someone had a question the other day about equal highs and equal lows and knowing the function of them right here. Let me delete this right here. This is a really, really good setup. You can see, obviously, pre-market, we were downtrending. Obviously, we had that relative manipulation right there and started to continue and pursue this downtrend. So we would want to be engaging with shorts and not trying to pick a bottom. And what do we see happen here? We see this swing high. Okay, this is an inducement right here. We see this swing high printed right here. We come up, we violate it, we close back within the range. What do we put in, though? Equal highs. If you know the function of equal highs and equal lows, what do? They form and take out the lows or highs that form them. What is the low that formed them? Right here. This low. You could even target this low if you wanted to be a little bit more confident, which are equal lows. You see that? I'm gonna point back to this too, right here. But I want to talk about this right here. We put in equal highs right here. We take that, close back within the range. You automatically wanted to anticipate the low that created those to be taken. You want to see price or anticipate price to be attracted to those specific areas that were formed in price, right? And if we look right here, the same exact thing happens with these equal lows. Now, these don't have any form of sweep, but it still shows the function of them. You can see we put in equal lows right here. What do? The high that puts them in, this high right here, it could even be this high over here. What do? We form them, we go up and take them. Does that make sense? If you have time, can you talk about usage of time in trading? I mean, macros, blending time and price. Yes. And then is 11:06 a.m. -5. I assume that's my time. Candle a CSS flip. 11:06. Yes. Yes, this would be a CSS. And you can see what happens. If you're wanting to take a quick scalp, what do? We close above it, we tap it to the tick, and get a quick scalp up. That looks like it gave at least a clean 101 up to the 50% of this imbalance right here. Yeah, 50% of that imbalance right there. I know, but it's only... I mean, okay, I'll tell you all this right now. And I don't think I've ever seen... Not too many... I don't know. I don't know if there's specifically something about this, but I will give you, like, a specific time area that I sometimes look for local highs and local tops to be put in, and that's usually like 9:30 CST. I remember saying something about it being like a reversal time macro, whatever. But if you really want to tailor it down, 9:27. I'll type this out. 9:27 to 9:33 a.m. CST. Usually what will happen within that time window is you'll see like a local high or a local bottom put in, and we'll expand from there. That's like a little tedious window. Yeah, 9:30, 10:30 is huge, 100%, 1,000%. But tailored down, you could do 9:27, 9:33. And then, right, I mean, just, I'm trying to find like a good, and it's like almost every 30-minute interval within an hour, more so the prominent ones where there's more volatility injected within the session. Obviously, if there's low volatility, we are not going to be necessarily really wanting to entertain those, if that makes sense. But in regards to time, basic macros, I will say most of my better trades definitely do happen within macros. 9:50 to 10:10 is one of the big ones, and you can see that is exactly within the time slot that this trade, basically this move started to stem off of. And you can see this one was around that 10:30 mark where it came up, put in that local high right up there. And today there really wasn't a good like a spot on, because usually a lot of times they'll be within that specific like 6-minute window. Obviously we put in like a tiny little local high right here that price moves away from him and then refers back to, but then we have ultimately this one at 935. Sorry for joining late. Are there any specifics to CSS? Should it be the following candle that creates the CSS shift, or can it be multiple candles? It can be multiple candles. Like I was talking about a second ago. Usually at maximum, or totally at maximum, it's going to be 1 or 2 candles. As you can see, I play them color coded, so you can see right here. We have this down bar right here, closes above it. This is going to be a 1 candle sequence. It's just going to be this candle right here. You can see how price reacts to that specific area. That stop that I had was all the way down here. Realistically, could have played it at this low. Actually, I think I had it at that low. I don't remember. But so that's a 1 candle sequence, and then in regards to like a 2 candle sequence, since they're color coded right here, it would be this right here, this double sequence right here, that low to this high. Basically, kind of think fractal. Like I used 1050 to 1110 UTC4 today for short. You were talking about. I asked in case if you know something more about that. I mean, honestly, I don't put too much of an emphasis on macros, but if I see a good quality setup form within the macro, I just use it as a confluence. I don't look at anything like too extreme, like to where I'm only looking at that time. But that's basically it in regards to macros. I would consider this a CSS as well. Yeah, that's basically. In a sense, that's like a CISD for sure. That would be cleaner in regards to the CSS, just the way that candle printed, because that green bar up by that black bar would not have been as clean. I will say that. And that being on the 12-minute kind of makes sense, because usually the 1 minute is where it's within the 2 sequence. I struggle with fractals, how to learn it. I will say, in my personal opinion, you kind of have to let fractals jump out to you. You can't kind of really force them. As you can see right here. I mean, you can force them. I mean, they're not hard to spot. But the easiest way to say it is just look for one of these clean little wiki moves right here. You see, I'll zoom in, maximum amount right here. You can see we have this wick, okay? This body close right here validates this when the candle closes and closes above, that validates it. That's why if you saw in my execution video, I think that was one of the areas that I marked out this fractal right here. You see we have that wick high, wick low. It's kind of hard to explain if I'm being truthfully honest. Like, it's one of those things where it kind of just jumps out to you, if that makes sense. But the easiest way to say it is wick high, wick low, and then that body close on the following candle. That basically confirms it. Because when you think in terms of expansion, if you're going by candle basis, you should know this is usually when we close above the high, we print a body above the other high. We're anticipating the next candle's high to be like a draw for price, if that makes sense. Yeah, there's swings on lower time frames, legit. Yeah. Now, 1 minute swings. I guarantee if you bump down to the 5 second, they aren't going to be as clean. They're probably going to be on a tick value chart, but that is exactly what they are, because I talked about this. Let me try and find an example real quick on the 12-minute of a fractal. This might be a clean one. Where is this? Yeah, perfect. This is a perfect example right here. Okay, based off what he just said, yes, flips are basically just low time frame, like SNDRs, right? If we look right over here, you see the same exact thing right here. This fractal, this is a bearish one. Low, high, validates it with this body close. Okay, now viewing that on the 1 minute, what do you see? Look at this. This is how it's going to be on every time frame. It's just fractalized. That's why you got to understand the fractal nature of price and understand that specific function on whatever time frame is going to be this on a lower time frame. That's why they give such good reactions, because sometimes you can take quick scalps basically just off of those. That probably put it a little bit more into perspective about the fractals, if I had to guess. Hopefully. And you draw a path line and can I draw a path line and explain CSS? Oh, I see what you're saying. CSS is this. It's candlestick structure. Where's my path tool? Okay. You see how we have this high, this low, this high, this low, close above, come back right over here. If I pull this out, what do we see? What is that? Dave talks about this all the time. What is this? Flipski. That's CSS with Path Tool, if that makes sense. You just kind of got to look at the wicks, basically. And what? Bad drawing? What? That's a great drawing. Looks like a lightning bolt. And I'm telling you, like, the first time I looked at CSS, I was like, dude, this makes absolutely no sense. Like, I'm looking at wicks. Like, what? But as you see it print day after day after day after day, backtesting, looking at them, they're going to become second nature. You're going to see them literally forming before they happen. I'll say that. Yeah, lightning bolts. What's meant by strong close, as Dave mentioned? I'm assuming just body close, because that's all I use. I specifically wait for body close. I do not take trades when it's like a wick above. I do not do that. So where do you take entry afterwards? This specific trade, the one that I posted right here, I had a limit placed right here at the high of this CSS candle, because these are going to be super, super sensitive. CSS is OB. Yeah, it could be classified as OB. In certain instances, it's going to be a little bit different. But in some instances, it's going to print exactly how order block prints. He does mention that, but I don't do that. Very rarely, especially bigger ones, don't give a retracement back to 50%. So I eat the possible. Think of it this way. Yes, you can get a better entry if it taps to 50%, but do you want to forego a lot of trades and miss them because you're wanting such a proficient entry? Whereas if you wanted to wither possibly a little bit more drawdown to guarantee an entry. Does that make sense? Can you relate to this, please? Hide these wicks. These are wicks you want to see a strong close above. Yeah, that's just a previous high. That validates the trend, basically. Like right over here, like just this random high over here, you want to see a strong body close over, which is what we get right here. This validates this, which on the 12-minute will be something relatively important. Does that make sense? That's basically what that is. Video 4 is gold. Yeah. I know, that's what I'm saying. Like, I'll tell you all this. Watch in the playlist Dave's executions. Watch the executions, learn from those. You're going to find, in my opinion, a lot of value from those because they're actual executions being printed. Or, well, I don't think he showed executions, but he talks about like the entry as it's happening. Does that make sense? 1.5. 1.5 times. I didn't really need to watch it too much. Because I mean, it resonated really, like I saw, like before I even started trading DTFX, I saw the setups happening. So it wasn't too hard for me to grasp at all. No one will learn this in 1 day, 1 week, 1 month. You must practice. Exactly. And that's what people get too focused on, is they see people, which is why a lot of people should not be on Twitter, because it promotes a bad mindset. You just need to focus on yourself and what you are doing, not what others are doing, right? You're going to fail. This is what this industry is. It's the hardest dang industry you can be in. You're going to fail time after time after time, and you just got to get up and keep pushing, man. Seriously. Before you knew what a hidden S&D is, I was trading it just from watching price print. Yeah, that's what I'm saying. You can do, if you're trading on the M1, you can do FX replay. If you're trading on the seconds charts, you can do Ninja Trader playback. Yeah, exactly. Twitter makes you compare P&L for sure. I mean, it's pretty toxic, if I'm being honest. Pretty toxic. Especially when a lot of bickering happens. Can you talk about the 10-second chart trade you took? Yes. Where is that at? I'm trying to. Was that one that I sent in the chat about when I said, what did I say? Oh, I just forgot. I completely forgot. So even on the seconds charts, you don't look for multiple candles creating a CSS. Well, I mean, it depends on the sequence it prints. If it's like, if I'm waiting for a bullish one and it prints opposing candles, I'm going to do that sequence that I was just discussing before. Whereas if it's just color coded perfectly, then I'll just base it upon that. Like if you look right here, just this random CSS right here, this one liquidates this low over here. You can see we close above it right here, validating it. And what do we tap right back into? Exactly. And expand off of right there. AP, guess you missed this one. Wait. Where was that at? When you take an entry off a CSS, do you consider a sweep within the CSS to take an entry? Yes. Perfect. Most times, those CSSs, the strongest ones will be after sweep, exactly like this one right here. Exactly. Because you know something was taken out of the market and it's returning back into the range. Think range. And those are going to be the highest probable ones, in my opinion. Yeah. Okay. So that specific one. There it is. 155. 155. Right here. This is literally what it was completely based on. Right here. This fractal right here. We had all of these stacked lows. I'll bump down to the second charts here in a second. Right here. Boom, boom, boom. It was based off that fractal because of what price is doing right here. As you should know, I always talk about like relative equal highs, relative equal lows as easy targets. And I'd say this is pretty ballsy of an entry, but I'll give the more confluential entry. I basically took it. I saw all of these stacked lows right here. You can see if we zoom in, I was on the 10-second chart at the time. You can see we have these lows all right here. We have triple equal lows right here. And we have basically are playing a continuation tap of this CSS right here. And all of this is residing in that 1 minute fractal, right? So we see that and I immediately think, okay, I can place a buy limit here. I'm confident enough to take this just because how much stuff is lining up right here, right? So I place a buy limit here. My stop's under here. Or actually, I think I have my stop a little bit higher. But I was not anticipating too much of a drawdown just because all of this stuff lining up here, right? If we look on the lower time frame, what is this all? Accumulation right up here. This is all accumulation. And then we get that one manipulation drop, taking out these triple equal lows into this fractal specifically into this fractal. Like I said yesterday, those POIs and where they occur, it all matters. You can't just be taking it at some like random sweep, because if you're taking a random sweep right here, you're going to get cooked. It's got to be in very specific things with certain things attached to it that are basically just confluences for your entry. But the proper, better entry, I'd say, that would have given a better R would have been taking off of this CSS right here. Let me move all this stuff over right here. And this is just a reference. This is on 10-second chart. And exactly what I was just talking about these CSSs is doing this exact same function right here. You can see we have this last down bar right here. That puts in that low. That liquidates that low. Like I was just saying, those best CSSs are going to come off the ones that liquidate those lows. You can see we close above right here. We don't get a tap yet. We come up, we take out that high, but ultimately narrative right here is higher, right? Because all these stacked highs right up here, that's going to be easy draw for price. Price refers back to here. And if you're wanting a extra confirmation for entry, you could either just do a limit here, which I would probably say is logical, or you could wait for the break above this candle right there as an entry to ultimately targeting right up there. Appreciate it, Ram. Do you require candle close on CSS? Yes, I do not. No, I do not do the wicks. And I feel like a lot of people miss this. They've actually put out a post saying that he does not, like, even for zones, he'll, like, in a couple of his videos on the playlist, he talked about, like, where he would do zones, like, just off the bodies. He actually put out a post recently where he uses both wicks. And, like, in regards to closes, I always require a body close because, to me, that signifies some sort of speed and some sort of institutional sponsorship rather than just a wick. A wick to me is nothing. Body close, however, significant. We'll probably get about 5 more minutes of questions, probably until about 6:10, because I got some stuff to do. But I feel like this is a pretty good session here. I find a trade like you just described difficult to execute because it's counter on structure on the 1 minute. Yes, that's like, I'll be honest, this was an intuition play complete intuition play. Because on the 12, I wouldn't say really intuition. There was some stuff backing it, right? Obviously on the 12 minute, if you look right here, what do we have? Failed swing. We close back within the range. We can deem this as a possible high to target, but in regards to wanting to go for low hanging fruit in the obvious point, where would it be? Right here. These are going to be easy targets for you to go grab for instead of reaching for those crazy extremes. Because even right here, this is where you got to be content with what the market gives you, and you got to trust your gut when like certain things line up. You can't be always like. That's why like I wouldn't say I semi-stop posting those 15-hour trades, because to me it's kind of implementing a bad mindset. Because I don't want people thinking that they need to be going doing those, when in reality you need to be going with what you see as the market as a exit, and what you trust and what fits within your risk parameters right here, right? Because I guarantee you some people may have been in this long and they may have been targeting up here because they saw on the 12 minute that we failed to close below that, and this is going to become a quote unquote weak high, and ultimately what happens? All of that profit gone. Yeah, exactly. How do I say your name? Is it Arquam? Arquam? Q? Appreciate it though. Only reason I really took it because yeah, exactly. And like a lot of those, like I said, a lot of those bigger plays are going to come off of the higher time frame, which like for this example right here, even though we had that 12-minute sweep right here confirming this, and you can see all of this structure is starting to form bullish in respect to the time frame. So we can anticipate what? This is basically almost kind of like a second distribution right here. We get this first move, we start to consolidate, we get that manipulation driven event, and what happens right here? And I want you to note something too when I do this projection right here. Oops, wrong thing. I don't know why that didn't toggle on that right there. Negative 1.5, it tops out in. And why does it top out negative 1, negative 1.5? Because what's the overall trend right here on the higher time frame? Bearish, but temporarily. Where are we flipping? Bullish. So when we see some bullish setups present, where can we anticipate to be a good draw for price if it's counter trend to the higher time frame? Negative 1, negative 1.5, any high residing within. Appreciate that, Austin. What's up, Penny? I'm literally just waiting on one thing. It should be tomorrow, hopefully at the absolute latest. And we can get the ball rolling on that, because it's killing me not to be able to open it up too early. But I gotta pay respects. Is there a short on a right side? Like, are you talking about the short right over here? If you're wanting to play this short right over here, this would have been good right here. You can see we close above right there. We close below right there. You could have taken an entry right off this basically little SNDR, responsible for that break right there. Or you could be waiting for some sort of sweep to happen within this, which happens right here. And if you're wanting to take a fractal version of the 1-minute scalps we've been talking about, you could be taking a entry off of the break of this candle that puts in that high right there. Yeah, I mean, I'd say that's valid, because look what happens on the 12-minute. This is actually a pretty quality trade. We failed to close on the 12-minute, exact same thing, inducement right there. If we bump down to the 1-minute over there, I'm sure. Yep, there was something right there. We got a what do we see right up here? CSS. Exactly where price tops out. Oh, Arcom. I gotcha. But yeah, no, unfair value gap. That was a good trade. I like your name, by the way. Unfair fair value gap. Unfair value gap. So the CSS at 907 CST didn't take anything in terms of liquidity. So the reasoning for that was coming just off the 12-minute. Yes. If that, like, let me go back to respective time frames real quick. 12-minute. Like I was talking about, I'm not sure if you were in here at the beginning, but right here, we see this 12-minute CSS right here. Price refers back to it, and I talked about that there's going to be basically a fractalized version of something within something, right? So we can anticipate a 12-minute CSS to generate a good 12 minutes or a good 1 minute CSS, right? Now, the best ones obviously will have some sort of low taken. We do take these lows, but we close below them. We don't get that specific function we like of seeing it close back within the range, but ultimately you got to trust and understand what the 12 minute is telling you. And if I'm being honest, like the main driver here was all of these highs right up here. This was the easiest draw in the world, especially when it's lining up with all of these standard deviation projections. And I mean, this like there's obviously some intuition. Like this is not pattern trading. Like you there's several factors in play here. Like just return on range, where it is, certain aspects, but like function wise, CSS within CSS, quick return back into the range, anticipating those highs to be the draw, as well as standard deviation projections and what happened already within that -1, -1.5. Because if this was going to continue, this return back in the range would not have happened right here. We would have saw a lethargic, maybe green candle, possibly coming back up here, putting a long tail wick, going off this imbalance, and it was going to continue down lower to these lows. But ultimately, if we zoom out over here, what do we see? This is going to be a short-term protected low. Do you even look at? No, I do not look at the 15-minute. I just 72-minute, 12-minute. And just go from there. And I'm actually curious, now that you say that, I'm going to go to the 72-minute. I should still have that drawn. Let me draw this line out real quick, because we did close above this -2.5. All right, just for reference, where we referred back to at end of day. Once we closed above this higher time frame, -2.5, closed above it, saw sweep, and we immediately started to gravitate back towards this -2, -2.5 area. I'm drawn to the 3 for drawing projections. Oh, 3? Yeah, no, the 3-minute gets some really, really clean projections. I didn't take that entry only because bearish candles closed below the wicks. I gotcha. That makes sense. What's that -2.5? It's just, like, are you asking what it is? No. That's here. I'll repop my fib settings up. There, it's Fibonacci settings. I'll pop this up so y'all can screenshot it again, right here. These are deviations away from manipulation driven aspect. Basically, the -1. It's a 1 standard deviation from. It's basically like a doubled distance of the manipulation. Usually with standard deviations or just manipulation legs in general, we can anticipate there to be at minimum a 1 standard deviation expansion away from, and a usual maximum is going to be -4. Yeah, you can use those settings too. Those are opposite of what I'm talking about. Unfair value. Yep. He's using those in a different aspect. Oh, it is an indicator? Oh shoot, I did not know that. Now, I don't know, because obviously indicators are not a human brain. I would not fully rely on that. I would 1000% go learn about them before you do anything. But we'll get a couple more questions and wrap it up here. I already went 10 minutes past what I said. Any last minute questions, and then we'll wrap it up. Should be, yes, Jay. It doesn't show your full name, but yes. Sounds stupid about how to backtest efficiently. I'll say this, honestly. Yes, I'll be live streaming. If I'm being honest, man, like backtesting's really good, but there's one important factor that's missing is 9 times out of 10 when you're backtesting, you're not going to be in the zone. Like as cliche as it sounds, when you're actually trading live markets without just a replay button, it's completely different. You're going to execute completely different, especially if you're trading with intuition. Obviously, if you're trading a mechanical model, it's going to be different. But if you have the slightest bit of intuition, your results are going to be completely different. But like I said, in terms of backtesting sites, you can do NinjaTrader Replay, which will allow you seconds charts if you have the data, and FX Replay if you're trading on the 1 minute. Yeah, backtesting gives false hope 1000%. All right, we'll go ahead and wrap it up here. I'm going to get this for the people wanting to know if this is recorded. Yes, I'm going to edit this real quick and get this uploaded on YouTube. And we will go from there. And I hope y'all enjoyed this review session. I appreciate all of the questions that you all had. I hope this helped. And wish y'all a good night and a good trading day for tomorrow to end the week off. Catch y'all later. Appreciate y'all.